The next story is all about this is landmark stuff right here. 4 drug companies reach a last-minute $260 million opioid settlement with 2 Ohio counties. That's huge. So we all know the story behind opioids. These are drugs that doctors prescribe once you're in some pain. And the problem is a lot of these drugs are addictive, and it's gone on to reach epidemic levels with the opioids. So these companies decide, without wanting to go to trial, there were 4 companies, without wanting to go to trial, they settled out of court for $260 million. Guess what? This now sets a precedent for other opioid companies to settle out of court or go to trial. If these companies didn't want to go to trial, that means there was probably a really good, strong case against them that they would lose, and probably lose a lot more money than $260 million. Now, if we scroll down, here's the 4 companies: Amerisource, Cardinal Health, McKesson, and Teva Pharmaceutical, and they fell short of a wider deal worth tens of billions of dollars to end all opioid litigation against them. So now, because they settled out of court, it doesn't look like they can be pursued anymore for any opioid litigation. Maybe smart on their part to say, listen, we'll shell out the money now. They won't be responsible for a lot more money later. So let's take a look at these 4 companies. All right, let's take a look at these 4 companies. We'll go back into the software. And the 4 companies are McKesson, where's my next one? Cardinal Health, American Source, that thingy right there, and Teva. These are the 4 companies. Let's analyze them real quick. Now, especially for the people who are new, this is the value of having the VectorVest software right here. We can analyze any stock. First off, we give a value for every stock in our database. It's what we feel the stock is currently worth. We want to see if you're trading in a stock that's under or over its value. Our mantra is to have you in safe, undervalued stocks rising in price in a rising market. So McKesson, trading at 145, value 206, definitely undervalued. Cardinal Health, 49.46, 61.05 is their value, definitely undervalued. ABC, 85, value 117, undervalued. And of course, Teva, 813, value 1071. All of these stocks are undervalued stocks. Now let's get into what I like to call the meat and potatoes of analyzing the stocks. Our 4 core proprietary indicators all cast on a scale between 0 and 2. Relative value, relative safety, relative timing, VST, and our 5th indicator, I think I just went through puberty. My 5th indicator, which is CI. All of these indicators are all cast on a scale between 0 and 2, where above 1 is favorable, below 1 is unfavorable. Relative value looks at the stock's long-term price appreciation potential over the next 1 to 3 years. We compare it to a safe investment like a AAA corporate bond. You buy into a bond, after it matures, you get your money back with a little interest. What we're going to say is, would you rather own this stock over a AAA corporate bond? McKesson's got a relative value at 1.40, above the value of 1, favorable. Now, at 1.4, we're saying that this stock should outperform that AAA corporate bond by 40% over the next 1 to 3 years. That's a stock that I want to hold on long term. Cardinal Health, 1.22, should outperform that AAA corporate bond by 22%. ABC, 1.26, should outperform that AAA corporate bond by 26%, and Teva should outperform the AAA corporate bond by 24%. So long term, all 4 of these stocks are stocks that you do want to hold on to. Relative safety, it's an indicator of risk. Relative safety looks at the consistency and predictability of a company's financial performance. Layman's term, does this company meet or exceed earnings year after year, quarter after quarter? Above 1, the stock is more likely to meet or exceed earnings. McKesson, 1.05, safety is okay. It's favorable, though, above the value of 1. Cardinal Health, below the value of 1. When earnings comes out on Cardinal Health, it may or may not meet or exceed, earnings expectations. ABC, above the value of 1, just barely as well. It should. And last but not least, Teva, the safety on the stock is not that good. It may or may not exceed earnings expectations. Now, RV and RS are our fundamental indicators. RT is our technical indicator. RT looks at the short-term price trend of the stock. Above 1, the stock's in an uptrend. Below 1, the stock's in a downtrend. 1.09 on McKesson. The stock is in an uptrend. 1.18 on Cardinal. Stock is in an uptrend. ABC is in an uptrend, but it's in the slowest uptrend compared to the other three. And Teva is in the biggest uptrend at this time right now. All right, so there you go. And then we wrap it up into our master indicator VST, which is the value, safety, and timing at 1.18, 1.11, 1.10, 1.11. The stock that's got the best combination of value, safety, and timing is McKesson. This is the reason why you look at more than one stock in the industry before you make a decision to make sure that you're buying into the best possible stock. This, in and of itself, is worth the admission to having the VectorVest software. All right, from this point, let's go look at the equity curves. The first one is McKesson, a lot more volatility on the stock. This stock has got a lot more volatility going into it. It is above the 20-day exponential moving average, but look at the fall. Since it made its recent contribution to settle out of court, the stock's price is falling. Earnings, which we're looking at, is forecasted. It is higher than it was a year ago, but just keep your eye on it. Let's go to the next one, which is Cardinal Health. Again, you're going to see the same kind of thing happening to all four stocks. Since they all settled out of court, look at the pullback on the price. Now, earnings is pretty solid, right? Not moving. The stock is above the 20-day exponential moving average, but currently falling. Same thing with Amerisource, pulling back since they decided to settle out of court. But look at the earnings. This company makes money. This company makes money. Look at the rising earnings. Even with the pullback because of the settlement out of court, this company continues to make money. Keep that in mind when looking at that company. And the last one is Teva. Teva was the lower dollar stock out of all of them, so maybe it wasn't affected nearly as much with the pullback. Watch, the stock is above the 20-day exponential moving average. Earnings is higher just barely than it was a year ago, pullback, but starting to rise up again. Teva, for a lower dollar drug company, might be in good play as long as it continues to rise if the rest of the companies rise up as well. So let me close that out. Let me see what chat is coming in. Jake is long Teva. Teva is that lower dollar stock, Jake. It is above the 20-day moving average and moving up. So let's go just see what happens. Opioids, wow. So Kirby put some personal information about what happened with opioids. And guess what? It's not just the big drug companies to blame for those that chose to do. I hear you, man. But I think that this is a step towards going after what the opioids have done to a lot of people adversely. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.